Ahoy there, deep divers! Get ready, because today we're taking the plunge into the wild world of marine insurance fraud.
Oh, is that right?
We are, and to navigate these treacherous waters, we've got Baris Soyer's book as our compass. He really gets into the legal battles and the crazy schemes people cook up in this industry.
Definitely intriguing stuff. I'm interested to hear more about it.
It's fascinating. I mean, we're talking phantom ships, mutinous crews, the works. I actually skimmed a few sections before we got started, and let me tell you, it's like something out of a movie.
Wow, phantom ships, huh? While it might sound made up, marine insurance fraud is a real problem, and it's costing the industry a fortune. And the fact that it spans across so many different countries, well, that only makes it harder to tackle.
It's a whole different beast, that's for sure. And get this. Sawyer breaks this world down into two main categories. First, you've got fraud committed by, say, the ship owners or the brokers, people directly involved with the insurance contract itself. Then there's the fraud that hits what the policy covers. You know, things like outright theft or even a ship captain going rogue.
Ah, I see two distinct categories.
Right. It's fascinating. And a bit worrying if you're the one writing the insurance policies.
Absolutely. And when you think about it, Sawyer's breakdown really highlights the vulnerabilities inherent in marine insurance. The first hurdle is this thing called information asymmetry.
Information asymmetry.
Basically, it means that insurers often have very limited knowledge about the people they're insuring, or even the risks involved, especially when it comes to overseas operations.
So they're kind of taking a leap of faith when they issue a policy.
In a sense, yes. Trust plays a big part, which, as you can imagine, opens the door to all sorts of risks. And then there's the challenge of physically inspecting every ship and its cargo.
Yeah, can you imagine?
Especially when you're talking about ships sailing to the far corners of the world, it would be incredibly expensive and time-consuming.
So naturally, that creates opportunities for fraud that simply wouldn't exist in, say, car insurance or home insurance.
Exactly. The logistics of marine insurance make it ripe for exploitation.
It's mind-boggling. Speaking of which, there's this part in the book that I found particularly perplexing. Sawyer mentions how underwriters sometimes get condemned for over-insuring vessels.
Over-insuring. That's interesting.
Right. It seems counterintuitive. Why would an insurer willingly overvalue something? You'd think they'd be guarding against that.
It's all about the potential payout, especially when you're talking about a constructive total loss. That's where the cost of repairs actually outweighs the value of the vessel itself.
So in those cases, it makes more financial sense to just declare it a total loss
Yeah.
and collect the insurance money.
Exactly. And that's where things can get murky. A fraudster might try to undervalue a ship when they buy it, then inflate its worth when they take out the insurance policy.
So if something were to happen to the ship, they could make a tidy profit.
Precisely. But proving intent in those situations, incredibly difficult.
I bet. There must be laws, though, right?
Yeah.
You can't just be a free-for-all out there on the high seas.
Oh, there are laws, definitely. But enforcing them, especially in international waters, well, that's another story altogether.
I can imagine.
Proving intent is just one hurdle. Then you have to consider things like which country's laws apply, the whole jurisdictional nightmare. And then there are these things called flags of convenience, which make everything even more complicated.
Flags of convenience. Now, that's a new one on me.
It's basically a way for ships to register in countries with, let's say, more relaxed legal environments or maybe more favorable tax structures, even if they primarily operate elsewhere.
So they're not actually sailing under their true flag.
Exactly. And that creates a whole web of complications for investigating fraud because now you're dealing with multiple legal systems.
A legal and logistical nightmare. No wonder these cases are so difficult to crack. It makes you realize how much this whole system hinges on good faith, which is something Sawyer returns to again and again.
Trust is paramount in this industry. Absolutely.
But when you're dealing with so much money and so much can go wrong, where do you even start drawing the line? How do you define what constitutes good faith in such a high-risk environment?
That's the million-dollar question. It boils down to this concept called moral hazard. The idea that people might act recklessly knowing that they're insured.
Because they're protected, so why not?
Right. Sawyer argues that even if it has nothing to do with the insurance policy itself, any instance of dishonesty from the insured should be a red flag.
Wait, hold on. Are you saying that if a ship owner gets caught, say, fudging their taxes, it could come back to bite them if they ever need to make a claim on their marine insurance?
Potentially, yes. The argument is that it reveals a tendency for dishonesty, which might influence their actions in other areas, including insurance claims.
Wow. That's a fascinating perspective. It's like judging their character, not just the specific incident itself. Sawyer's take on moral hazard is making me rethink this whole notion of trust in insurance agreements.
It's a complex issue, that's for sure.
It really is. But let's dive into some of these fraudulent claims. The whole concept of phantom ship fraud immediately caught my attention. It sounds so, well, unbelievable.
It does, doesn't it? But it happens more than you'd think. Remember what we said about information asymmetry?
Right, where the insurer is often in the dark about the details.
That's where these schemes thrive. Fraudsters spin these elaborate tales about ships and cargo that don't even exist. And they're good at covering their tracks, choosing remote locations, or forging documents to make verification near impossible.
It's like a financial illusion. By the time the insurance company realizes they've been had, the money's gone. The fraudsters have vanished.
Gone without a trace, leaving the insurer to sort through the wreckage.
And then they're scuttling, intentionally sinking a ship, just to cash in on the insurance policy. It's a pretty desperate measure, if you ask me.
It's often linked to economic downturns, a last-ditch effort to avoid financial ruin, as Sawyer points out.
The allure of that big payout can be tempting when times are tough, but you'd think scuttling would be easier to prove than a phantom ship. I mean, the evidence is right there at the bottom of the ocean, right?
You'd think so, wouldn't you? But the burden of proof lies with the insurer. They have to demonstrate intent, prove that the sinking wasn't an accident.
So it's not enough to just find the wreckage. You have to prove why it ended up there.
Precisely. And the sea, as they say, holds its secrets close.
It makes you realize how much this boils down to a battle of wits between the fraudsters and the insurance companies.
Yeah.
Speaking of which, what about barratry? That one sounds like something out of a pirate movie.
Barratry involves illegal acts committed by the ship's captain or crew, typically for personal gain.
Mutiny on the high seas. So how does that tie into insurance fraud?
The challenge, and where the potential for fraud comes in, is proving whether the owner was in on it or not. Was it a rogue captain acting alone, or was the owner complicit in the scheme?
Because if the owner is in on it, it becomes a conspiracy, not just barratry, right?
Yeah, you got it. And proving that the owner was completely unaware of their crew's shady dealings or didn't benefit from it, well, that can be incredibly difficult.
Especially when you're dealing with, as you said, international waters and layers of legal complexities.
Exactly. It often becomes a case of he said, she said, with very little hard evidence to go on.
It sounds incredibly frustrating for the insurance companies.
It can be. And this all goes back to the burden of proof. For an insurance company to successfully deny a claim based on fraud, they need clear and convincing evidence. Suspicion alone isn't going to cut it in court.
So even if they have a hunch that something's fishy, they can't just deny a claim without solid proof.
Not if they want to avoid a lawsuit, they can't. And to make things even trickier, sometimes exaggerating a claim while dishonest might not actually be considered full-blown fraud in the eyes of the law.
Wait, really? So there's a gray area between, say, inflating the value of some stolen goods and claiming a Kraken attack.
You laugh, but there are definitely different interpretations of what constitutes fraud, which is another reason these cases are so complicated and often end up in lengthy legal battles.
A field day for maritime lawyers, I imagine.
Yeah.
But hold on a second. Because we've been focusing so much on how people seeking insurance payouts might commit fraud, I completely forgot about the flip side of this whole thing. You mentioned it earlier that insurance companies themselves can be the bad guys.
It's true. Believe it or not, insurance companies aren't always the innocent party in these situations.
No way. Are you serious? So they engage in fraudulent activities too.
It happens. While it might seem surprising, they're just like anyone else, prone to temptation and sometimes willing to cut corners.
But what would they do? Create their own phantom ships?
Not quite. Their methods tend to be a little more, shall we say, subtle.
Like what?
Think along the lines of withholding crucial information from the insured, intentionally dragging their feet on processing claims, or even making false statements during the whole process.
That's wild. It sounds incredibly risky, though. I mean, what's the motivation for them to do that?
Often it boils down to protecting their bottom line. Delaying or denying a claim saves them money, at least in the short term.
It's playing a dangerous game, though. If they're caught, it could destroy their reputation and lead to even more legal troubles down the road.
It's the classic case of short-term gain, long-term pain, and it really underscores the importance of utmost good faith, something we touched upon earlier.
Refresh my memory. What does that mean again?
It's a core principle in insurance contracts that mandates both the insurer and the insured act with complete honesty and transparency throughout the entire process.
So no hiding information, no making misleading statements, that kind of thing.
Exactly. It's a two-way street. The insured needs to be upfront about the risks they're insuring, and the insurer has to be transparent about the policy's terms, especially when it comes to handling claims.
So basically, it's a mutual agreement to play fair.
Precisely. And any breach of this duty, especially if it's deemed intentional, is taken very seriously by the courts. It undermines the very foundation of trust that insurance is built upon.
And what happens if an insurer is caught red-handed, so to speak, acting in bad faith?
Well, for starters, the insured could have grounds to sue for damages. Depending on the severity of the breach, the insurer might also face regulatory penalties or sanctions.
So the stakes are high for everyone involved.
Absolutely. And that brings us back to the heart of what we're discussing. Marine insurance, just like any type of insurance, is this intricate web of risk, trust, and financial responsibility. To truly grasp the complexities of it all, you have to understand how fraud operates from both sides of the equation.
It's a fascinating, albeit somewhat unsettling world we've been exploring today. From phantom ships and rogue captains to insurance companies bending the rules, it's clear that navigating these waters requires a sharp legal mind and a healthy dose of skepticism.
Don't forget a strong moral compass.
Right. That too. Because at the end of the day, it's about remembering that behind all these contracts and clauses are real people and real businesses, and the decisions they make, both ethical and unethical, have far-reaching consequences. But before we get too philosophical, I want to switch gears a bit and delve into some specific types of fraudulent claims. One that caught my eye, and it's a classic, is plain old theft.
Ah, yes, the good old-fashioned five-finger discount. Even in this high-tech world of maritime shipping, theft remains a persistent problem.
And probably even harder to track and prevent than some of those more elaborate schemes we talked about, right?
Absolutely. Remember, we're talking about a complex global network here where goods change hands multiple times during transit. Pinpointing exactly when and where the theft occurred can be incredibly difficult.
So was it pilfered from the ship itself, from a warehouse during a stopover, or even before it was loaded onto the vessel?
Exactly. It becomes a logistical puzzle for insurers trying to investigate these claims.
No wonder it's such a headache for them. And I imagine it also makes it incredibly challenging to determine who's ultimately responsible.
Absolutely. That's why those cargo clauses in insurance policies are so crucial.
The cargo clauses.
They spell out exactly which types of theft are covered and under what specific circumstances.
It's all in the fine print, as always. I noticed that some policies differentiate between theft committed by, say, individuals outside the vessel versus theft by a member of the ship's own crew.
That's a key distinction. Most standard cargo policies will cover theft by external parties, like pirates or even dock workers. But they might specifically exclude theft by the crew themselves.
Which makes sense, I suppose. Otherwise, you'd have dishonest crews staging robberies left and right to get a cut of the insurance payout.
Exactly. It's all about mitigating risk for the insurer. They have to draw the line somewhere.
So a ship owner really needs to be on top of their game, making sure they have adequate coverage for theft by crew members, especially if they're transporting valuable goods. You never know when your own team might turn rogue.
Couldn't agree more. And that brings us to another fascinating aspect of marine insurance, that Soyer delves into piracy. It might seem like something out of a history book, but it's a very real threat, even today, in certain parts of the world.
It's definitely one of those things that captures the imagination, and it really speaks to how maritime law and insurance have had to adapt over the centuries to address these enduring threats.
For centuries, piracy was simply considered an inherent risk of sailing, just another peril of the sea, and it was typically covered under standard marine policies. But as piracy has become more organized and more brazen, particularly in places like the Gulf of Aden, insurers have had to adjust.
So what can ship owners do to protect themselves in those high-risk areas?
Nowadays, they need to secure what's called war risk insurance. It's designed to cover acts of piracy, along with other war-related perils.
So it's a two-pronged approach. Standard marine insurance for the everyday risks of the sea, and then war risk insurance for those more extreme politically charged dangers.
Exactly. It highlights the importance of understanding the nuances of coverage and making sure you have the right protection for your specific needs.
It's not one size fits all when it comes to marine insurance, that's for sure. But even with those protections in place, I imagine proving a piracy claim can be incredibly challenging.
You're telling me. Imagine a scenario where a ship claims to have been attacked by pirates in some remote location, There are no witnesses, the evidence is scarce, and it essentially boils down to the insurer's word against the insured's.
It becomes a high-stakes game of cat and mouse.
It really does. And that's why investigating these claims requires a multifaceted approach, involving maritime security experts, analyzing shipping routes and patterns, even collaborating with international authorities to gather intelligence and track down potential witnesses. In some cases, they might even bring in forensic accountants to pore over financial records, looking for any inconsistencies.
Talk about a global investigation. It really highlights the complexity of this world and how marine insurance is about so much more than just crunching numbers and assessing risk. It requires a deep understanding of maritime law, international politics, even human psychology.
You hit the nail on the head, and that's why expertise is so crucial in this field, as Sawyer emphasizes. Having the right people on both sides of the equation can make all the difference.
What do you mean by that?
Well, on the insurer side, you need adjusters and investigators who thoroughly understand the ins and outs of maritime law, along with the nuances of fraudulent activities. Ship owners and cargo owners benefit greatly from working with knowledgeable brokers who can guide them through the complexities of securing the right coverage and navigating the often confusing claims process.
Like any specialized field, it pays to have someone in your corner who knows the ropes.
Absolutely. Especially in a world as complex and potentially treacherous as marine insurance.
Speaking of treacherous, Sawyer's discussion of constructive total loss was fascinating.
It is an interesting concept. From an insurer's perspective, it's one of those areas where the potential for fraud is significant.
How often do you think it's used in fraudulent claims?
It's hard to put an exact number on it, mainly because cases of suspected fraud aren't always made public. And even when they are, proving intent is incredibly challenging. But industry experts estimate that constructive total loss plays a role in a significant percentage of fraudulent marine insurance claims. It's particularly attractive for fraudsters because it can be very difficult to disprove, especially when you're dealing with older vessels or ships that haven't been properly maintained.
So a ship that's seen better days, so to speak, is more likely to be declared a total loss after an incident, even if it could technically be repaired, simply because the cost of those repairs would be astronomical.
Exactly. And that's where the potential for fraud comes in. A ship owner, especially one who's not playing by the rules, might intentionally neglect maintenance, knowing that any significant damage will likely result in an insurance payout that far exceeds the ship's actual value.
That's pretty sneaky.
Yeah.
Seems like a fine line between accurately assessing the true value of a ship, figuring out whether it's more cost-effective to repair or replace it, and determining whether the owner has been intentionally negligent.
It's a high-stakes game, that's for sure, and one where the line between legitimate business practices and outright fraud can become very blurry.
Right.
That's why a thorough investigation is crucial in any case where constructive total loss is suspected.
I can only imagine the red flags that must go up for an insurance company when they suspect a constructive total loss claim might be fraudulent.
Well, a big one is if a ship has a history of questionable maintenance records, if they've been cutting corners on upkeep, or if there's been a sudden and unexplained change in ownership just before the incident occurred.
Trying to distance themselves from the scheme.
Exactly. And of course, if the claimed value of the vessel is significantly higher than its actual market value, that's a major red flag.
It's all about connecting the dots, looking for those patterns, and sometimes just trusting your gut when something feels off.
You got it. It requires thoroughness, asking the tough questions, and not being afraid to dig deeper when something doesn't sit right.
You really need to be a bit of a detective in this line of work.
You could say that.
Speaking of being thorough, we touched upon utmost good faith earlier. I wanted to circle back to that for a moment. It seems like such a simple concept, yet as we've seen, it can be easily abused even by the insurance companies themselves.
It's absolutely crucial, the bedrock of the entire industry, really, and you're right, it can be manipulated.
What struck me was when Sawyer explained how a breach of utmost good faith can actually void an insurance policy altogether. That's a pretty big deal.
It is. It underscores how serious a breach of utmost good faith is in the eyes of the law. It strikes at the very heart of the insurance contract, which is built on a foundation of trust and transparency. When that foundation crumbles, the entire agreement can collapse.
So if someone applying for insurance, whether it's the ship owner or anyone else, if they deliberately misrepresent information during that process, they're risking their entire policy.
Absolutely. And the same goes for the insurer. If they fail to disclose crucial policy details or try to mislead the insured in any way, It can have serious consequences.
So it's a two-way street, just like we were talking about earlier. Both sides have to be upfront and honest, or the whole thing falls apart.
Exactly. It highlights the importance of clear, open communication from the get-go, from the moment someone applies for a policy all the way through to, unfortunately, if they ever have to make a claim.
It's a good reminder that this industry is built on a foundation of trust, and when that trust is broken, the consequences can be significant, both legally and financially.
Couldn't have said it better myself.
It makes you appreciate the companies and individuals out there who are playing by the rules, who understand that a good reputation is built on honesty and integrity.
They're the ones who keep this complex system running smoothly.
They're the backbone of this fascinating, though often murky, world of marine insurance. But before we wrap up our deep dive into the darker side of things, there's one more type of fraudulent claim I wanted to ask you about. It's called oversalvage. And frankly, it sounds like something straight out of a heist movie.
Oversalvage. It's a classic example of how creative fraudsters can get when they're looking to game the system.
So what is it exactly? Is it like the opposite of scuttling, where instead of sinking a ship, they're exaggerating the costs of rescuing it?
You got it. Imagine this. A ship runs aground. Right. But instead of cutting their losses, the owners, working with a shady salvage company, inflate the costs of the whole operation, the towing, the repairs, even the value of the cargo that was supposedly damaged, to get a bigger payout from the insurance company.
That's pretty clever, I have to admit. But surely insurance companies are wise to this kind of scheme by now. What measures are they taking to protect themselves?
You're right. Insurers are catching on. They're working much more closely with reputable salvage companies these days, and they often have their own experts assess the legitimacy of salvage claims. They're also using technology to their advantage. Satellite imagery, data analysis, you name it, to verify the location and condition of vessels, to track salvage operations, and to scrutinize those expense reports for any inconsistencies.
It's a high-tech game of chess. Both sides constantly trying to outmaneuver each other.
That's a great way to put it, and it highlights how dynamic this industry truly is. As fraudsters come up with new, more sophisticated schemes, insurers are forced to adapt, constantly evolving their tactics to stay one step ahead.
It's an ongoing battle, that's for sure. Well, we've certainly covered a lot of ground today. Phantom ships, scuttling, cargo clauses, utmost good faith, and even a bit of oversalvage for good measure.
And that's just scratching the surface. The world of marine insurance fraud is vast and endlessly fascinating, full of twists and turns.
It certainly is. But I think amidst all the talk of fraud and deception, it's crucial to remember that this is ultimately a story about human behavior, about trust, greed, and the lengths people will go to for a quick profit. What are your thoughts on that?
I completely agree. While we can put safeguards and regulations in place, the human element will always be the wild card in the equation.
So true. And on that note, I think it's time for us to steer this ship back to shore. But before we do, I want to leave our listeners with one final thought.
What's that?
We spent all this time exploring the dark underbelly of marine insurance, uncovering a world of deception, greed, and high-stakes schemes. But amidst all the tales of fraud and treachery, it's important to remember that for every act of dishonesty, for every attempt to game the system, there are countless individuals and companies operating with integrity, upholding those principles of trust and transparency that are essential for the smooth functioning of global trade. What do you think?
I think that's an important message, especially in an industry as complex and often as murky as this one. For every bad apple, there are countless others who are committed to doing business the right way, and they deserve recognition for that.
They really do. So as we wrap up this deep dive into marine insurance fraud, let's remember that while the potential for deception is always present, there is still a great deal of good faith and fair play happening out there on the high seas. And that's something worth celebrating.
Absolutely.
Well, on that note, until next time, fair winds and following seas to you all. We've been talking about how those seeking insurance payouts might engage in fraud, but as we just learned, even the insurers themselves can be the bad guys. What I found striking in the book was how Soyer digs into specific types of fraud and how they impact what the policy actually covers. And one of the most prevalent seems to be good old-fashioned theft. Putting pirates aside for a moment, let's talk about those everyday sticky-fingered crooks who make off with cargo.
Theft is a constant concern in this industry, and it's rarely a simple case to crack. Remember, we're dealing with a global network where goods change hands multiple times during transit.
So tracing the when and where of the theft becomes a real head-scratcher.
Absolutely. Was it pilfered from the ship, a warehouse during a stopover, or even before it was loaded? It becomes a logistical puzzle for insurers trying to investigate.
I can see how that makes pinpointing responsibility a nightmare.
Precisely. That's why those cargo clauses in insurance policies are so important. They spell out precisely which types of theft are covered and under what specific circumstances.
Let's talk about those clauses. I noticed some policies distinguish between theft by those outside the vessel and theft by, say, a ship's own crew.
That's a critical distinction. Most standard cargo policies will cover theft by external parties, like pirates or even dock workers. But they might exclude theft by the crew themselves.
That's understandable, I suppose. Otherwise, you'd have dishonest crews staging robberies left and right for a cut of the insurance payout.
Exactly. It's all about mitigating risk for the insurer.
So, a ship owner needs to be extra careful to secure coverage for theft by crew members, especially when transporting high-value goods. You don't want to be caught off guard if your own team turns rogue.
Couldn't agree more. And this leads us to another fascinating aspect. Soyer covers piracy. It might seem like something straight out of a history book, but it's a real threat even today in certain parts of the world.
It definitely captures the imagination, and it speaks to how maritime law and insurance have had to evolve over time to address these enduring threats.
For centuries, piracy was simply considered a peril of the sea, just another risk you took when setting sail. It was covered under standard marine policies. But as piracy has become more organized and brazen, particularly in places like the Gulf of Aden, insurers have adapted.
So how do ship owners protect themselves now?
They need to secure what's called war risk insurance. This type of coverage is designed to handle acts of piracy along with other war-related perils.
A two-pronged approach. Then standard marine insurance for the everyday risks of the sea, and war risk insurance for those more extreme, politically motivated dangers.
Exactly. It highlights the need to understand the subtleties of coverage and ensure you have the right protection for your specific needs. But even with these protections in place, proving a piracy claim can be incredibly challenging.
In what way?
Well, imagine a scenario where a ship claims to have been attacked by pirates in a remote location. There are no witnesses, the evidence is scant, and it's the insurer's word against the insured's.
It becomes a game of cat and mouse. How does an insurer even begin to investigate a claim like that?
It requires a multifaceted approach. They might work with maritime security experts, analyze shipping routes and patterns, and even collaborate with international authorities to gather intelligence and track down potential witnesses. In some cases, they might even employ forensic accountants to examine financial records and look for any inconsistencies that could point to fraud.
It sounds like detective work on a global scale. It makes you realize that marine insurance is about so much more than just crunching numbers and assessing risk. It requires a deep understanding of maritime law, global politics, and even human psychology.
You've hit the nail on the head. And that brings us to another point that Soyer emphasizes the importance of expertise in this field.
What does he mean by that?
Well, because marine insurance is so specialized and complex, it's crucial to have experienced professionals on both sides of the equation. Insurers need adjusters and investigators who understand the intricacies of maritime law and the nuances of fraudulent activities. Similarly, ship owners and cargo owners benefit from working with knowledgeable brokers who can guide them through the complexities of securing adequate coverage and navigating the claims process.
It's like any specialized field. You need the right people with the right expertise to navigate the complexities. Speaking of complexity, Sawyer's discussion of constructive total loss was fascinating. It made me wonder, how often is this tactic used in fraudulent claims?
It's difficult to pinpoint an exact number, as cases of suspected fraud are not always publicly disclosed, and proving intent can be incredibly challenging. However, industry experts estimate that constructive total loss is a factor in a significant percentage of fraudulent marine insurance claims. It's a tactic that's particularly attractive to fraudsters because it can be difficult to disprove, especially when dealing with older vessels or those that have been poorly maintained.
So a ship in a less than stellar state is more likely to be declared a total loss after an incident, even if it could be repaired, because the costs would simply be too high.
Exactly. And that's where the potential for fraud arises. A ship owner might deliberately neglect maintenance, knowing that any significant damage will likely result in an insurance payout exceeding the vessel's actual value.
That's a devious tactic.
Yeah.
It sounds like a delicate dance between assessing the true value of a ship, understanding the costs of repair versus replacement, and determining whether there's been any intentional negligence on the part of the owner.
You've got it. It's a high-stakes game where the line between legitimate business practices and outright fraud can be blurry. And it's why, as Sawyer stresses, a thorough investigation is crucial in any case where constructive total loss is suspected.
It makes you wonder, what are some red flags that might make an insurer suspect a constructive total loss claim is fraudulent?
There are a few key indicators that might raise eyebrows. For instance, if a ship has a history of questionable maintenance records, a sudden and unexplained change in ownership shortly before an incident, or if the claimed value of the vessel significantly exceeds its market value, these could all be signs that something's amiss.
It's about connecting the dots, looking for patterns, and trusting your gut when something feels off.
Precisely. It's about being thorough, asking the tough questions, and not being afraid to dig deeper when something doesn't quite add up.
This has been incredibly insightful. Sawyer's book does a fantastic job of pulling back the curtain on this often secretive world. But before we wrap up, I want to shift gears slightly and revisit a concept we touched upon earlier, utmost good faith.
A cornerstone of the entire insurance industry, wouldn't you say?
Absolutely.
Yeah.
But it's also a principle that can be easily abused, as we've seen. What I found particularly interesting was Sawyer's discussion of how a breach of utmost good faith can actually void an insurance policy.
It's a crucial point. A breach of utmost good faith is a serious offense in the eyes of the law. It strikes at the heart of the insurance contract, which is built on a foundation of trust and transparency.
So if an insured party deliberately misrepresents information during the application process, or if an insurer fails to disclose crucial policy details, it can have serious consequences.
Exactly. It can be grounds for the insurer to void the policy, deny a claim, or even pursue legal action.
That raises the stakes considerably. It emphasizes the importance of honesty and transparency on both sides of the equation.
Without a doubt. And it reinforces the need for clear and open communication throughout the life of the policy, from the initial application to the unfortunate event of a claim.
It's a reminder that this industry is built on trust, and when that trust is broken, the consequences can be significant. But before we get too lost in the legal weeds, let's take a moment to acknowledge that while we've been focusing on the potential for fraud and deceit, the vast majority of players in the marine insurance industry are honest and ethical.
Absolutely. It's important to remember that the vast majority of ship owners, cargo owners, brokers, and insurers operate with integrity. They understand that a good reputation is paramount in a business built on trust and long-term relationships.
They're the backbone of this complex and fascinating industry, and their commitment to ethical conduct helps to ensure the smooth sailing of global trade. Speaking of smooth sailing, before we wrap up our deep dive into the murky depths of marine insurance fraud, I did want to ask you about one more specific type of fraudulent claim. I'm curious to hear your thoughts on oversalvage schemes. It sounds like something straight out of a heist movie.
It does, doesn't it? And it's a testament to the creativity of those seeking to game the system. Essentially, oversalvage schemes involve inflating the costs associated with salvaging a damaged vessel or its cargo to fraudulently claim a larger insurance payout.
So instead of scuttling a ship, they're exaggerating the expenses involved in rescuing it.
Precisely. Imagine a scenario where a ship runs aground. The owners, in cahoots with a salvage company, might inflate the costs of towing, repairs, or even the value of the cargo that was supposedly damaged to maximize their insurance claim.
It's a clever tactic, I'll give them that. But surely, insurers are wise to these schemes by now. How do they protect themselves?
You're right. Insurers are becoming increasingly savvy when it comes to oversalvage scams. One way they're fighting back is by working more closely with reputable salvage companies and having their own experts assess the legitimacy of salvage claims. They're also leveraging technology, using satellite imagery and data analysis to verify the location and condition of vessels, track salvage operations, and scrutinize expense reports for any inconsistencies.
It's a high-tech game of chess, with both sides trying to outmaneuver each other.
That's a great way to put it. And it highlights the dynamic nature of this industry. As fraudsters develop new and more sophisticated schemes, insurers are constantly evolving their tactics to stay one step ahead. It's an ongoing battle of wits and resources.
It sounds like it. We've covered a lot of ground today, from phantom ships to scuttling, from the intricacies of cargo clauses to the importance of utmost good faith.
And we've only just scratched the surface. The world of marine insurance fraud is vast and endlessly fascinating, with new challenges emerging all the time.
It certainly is. But as we delve deeper into this world, I think it's crucial to remember that beyond the legal battles and financial stakes, this is ultimately a story about human behavior, about trust, greed, and the lengths to which some will go to exploit the system.
Couldn't agree more. It's a reminder that while we can implement safeguards and regulations, The human element will always be the wild card in the equation.
We've been talking about the crucial role of underwriters in the world of marine insurance. And it strikes me that they must be like detectives in a way, always on the lookout for red flags that might indicate a potential for fraud. What are some of the things that make an underwriter's spidey sense tingle, so to speak?
You're right, underwriters are like financial detectives, constantly piecing together clues to assess risk. One thing that always raises a red flag is incomplete or inconsistent information on an application. If a ship owner is being evasive about their vessel's history, the experience of the crew, or the nature of the cargo, it's a sure sign that something might be amiss.
So transparency is key. Any attempt to hide or obscure information is a major warning sign.
Absolutely. Another thing that underwriters pay close attention to is the financial stability of the applicant. If a ship owner is heavily in debt, has a history of financial troubles, or seems overly eager to secure insurance coverage that far exceeds the value of their vessel or cargo, it raises concerns.
It's about connecting the dots, looking for patterns that might suggest a motive for fraud.
Precisely. Underwriters are also increasingly relying on data analysis and technology to aid in their investigations. They might use sophisticated software to analyze shipping routes, track weather patterns, and even monitor social media for any chatter that could indicate a potential for fraud.
It sounds like a high-stakes game of information warfare.
In a way, it is. The battle against marine insurance fraud is constantly evolving, with both sides using increasingly sophisticated tactics to gain an edge. But at its core, it's still about understanding human behavior, recognizing patterns of deception, and trusting your gut when something feels off.
That human element is so crucial, isn't it? No matter how advanced our technology becomes, it seems we'll always need that human intuition to cut through the noise and make those judgment calls.
Absolutely. And that's why experience is so invaluable in this field. Seasoned underwriters have seen it all, and they have a knack for spotting inconsistencies, asking the right questions, and separating the legitimate actors from the potential fraudsters.
They're the guardians of this complex and often unpredictable industry. As we navigate away from this deep dive into the world of marine insurance fraud, I think it's essential to recognize the critical role that underwriters play in keeping the system afloat.
I couldn't agree more. They may not always make headlines, but their work is essential to ensuring the smooth sailing of global trade.
Well said. And on that note, I think it's time for us to wrap up our exploration of marine insurance fraud.
I've enjoyed our conversation.
Me too. It's been a fascinating journey into a world that most people probably never even think about. But as we've discovered, it's a world full of intrigue, high stakes, and important lessons about trust, risk, and the constant battle against deception. So until next time, dear listeners, may your own voyages be free of fraud and full of smooth sailing.